Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and consider other important aspects of working for yourself, being self-employed, running a small business. So today, as part of our bite-sized series of demos for your QuickBooks software, we're going to talk about the difference between bills and expenses in the software, what they mean, and the implications of using each of them. Before I do that, if I could please ask you to take a moment. If you're new here, please do subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you should need to, as well as finding other information that we have on a whole host of different topics, including other demonstrations on your to help you understand how to use your QuickBooks software. So back then to bills and expenses in the software, what do they mean, when to use each, and the implications, what will happen if you use each of them. So the same as lots of things in accounting, in bookkeeping, there's lots of different phrases, lots of different jargons that essentially mean the same thing. And this can cause a lot of confusion. It can cause confusion if you're not familiar with what a term means in the context that you're seeing it. And this is true also in the various softwares. So what is important is that you understand for your QuickBooks software what the terminology means in respect to the software when you're using the software. And if you can keep that in mind, then this will help you to understand the differences and help you to ensure that you use whichever the most appropriate is for you and for your business and for the particular software. So what I'm going to do now is I'm going to jump into the demo software, because this will help me to explain and to illustrate better the differences between bills and expenses and what's going to happen when you use each of them. So here we are in our QuickBooks demo software. And as I mentioned, we're looking at the difference between bills and expenses. And this particularly can cause a lot of confusion by the use of the names. And that's not a negative comment about the software, because all the different softwares have different names for different things, and they will all cause confusion at some different level if you don't take the time to understand exactly what that is referring to. So a bill in the QuickBooks software is the name given for a purchase invoice. So if you buy something from a supplier and they give you the invoice for you to make the payment to them, then this is known as a bill in your QuickBooks software. Now, expenses, again, can cause a lot of confusion because people think of sort of claiming expenses, or they might think of the expenses being a name sometimes used for the overhead section of the profit and loss. When it comes to using your QuickBooks software, you need to forget about all of those terms, and expenses are simply things that you are categorizing directly to the chart of accounts. So you will remember from previous videos that essentially there's two different ways to get expenditure into the chart of accounts. So the important thing from an accounting perspective is that we need to know what your expenditure has been in total, and we don't need to know whether that is outstanding, that or is paid. That is what we would call a balance sheet item. So in terms of compiling your profit and loss to work out your taxable profit, we only actually need to know what that money is spent on. We don't need to know whether it's outstanding or not. So that is important for the balance sheet. But then further than that, when we're looking at the accounts and we're looking at the balance sheet, from an accounting perspective, we only actually need to know how much you owe all of your suppliers. This is known as the creditors. But of course, if you logged into your software one day and you were just told this is the big parts, this is how much all of your suppliers are owed, how much you need to pay to them, that wouldn't be very helpful in you managing, because you would not know who you owed what to and how that balance has arisen. So therefore we use the creditors on the balance sheet to be able to enter the bill in the QuickBooks software. So this is entering the purchase invoice. So at the point that you enter the bill, this is putting the expenditure into your profit and loss, directly into your chart of accounts. So if you entered a bill onto QuickBooks, a purchase invoice known as the bill in QuickBooks, and then you ran your profit and loss, you would see that it would have exactly changed by the net amount of the bill that you had just entered. So you have accounted for that in the profit and loss. Now, by entering the bill, you have told QuickBooks which supplier account that you're entering the bill for, and this therefore on the balance sheet adds the outstanding amount to the creditors balance of the balance sheet. And therefore, through your software, through the reports, you can then drill down to see which suppliers that you owe how much money to. So when you make the payment, say if you made it from your current account, then what essentially happens at the point of that transaction is you're not impacting the profit and loss at all, because you already accounted for the expenditure at the point that you entered the bill. At the point that you pay the bill, then you're simply moving items on your balance sheet. So you're going to reduce the balance of your bank account and show that has reduced the amount that you owe that supplier by the same amount. So this is the process of what's happening at each point of those transactions. So at the point that you enter the bill, and if you go into the expenses and into the bill section of your QuickBooks software, then you can see the bills that are unpaid. So all of these items, you haven't paid them yet to the suppliers. They are outstanding. You have entered that purchase invoice, and by using the bill function in your QuickBooks software, you've entered that bill. So at this point in time, that you still got the money, you've got the purchase invoice, and you have accounted for that expenditure in your profit and loss. And in the creditors on your balance sheet, you will see these outstanding. And we can see this by going to the report section and scrolling down to what you owe. And if we look at the detailed supplier balance, run that report, you can see here, this is telling us the total for the creditors on the balance sheet, which is 5,699 and 6 pence. And the report is showing us who we owe what to. But so as we know, by keeping this up to date, that helps you to manage the finances of your business by seeing what you owe, who you owe what to. So if I hop into the bank account and look at the transactions awaiting allocation, in this demo we have a live bank feed or imported transactions. So you can see here I have a bill waiting to pay, and if I open that up, then I can see that this is the right bill that I want to pay. And so what I'm going to do is click on match. And what that has done now is that has reduced the balance of my bank account. And if I head back to the reports and back into who I owe money to, supplier balance detail report, then you can see that that outstanding bill has gone from the report. So what I've done there is when I entered the bill, I logged the purchase invoice into my QuickBooks software, and what that did was that that showed on the balance sheet that I had that amount outstanding on the creditors, and at the point that I made the payment, then I moved the amount on the balance sheet from the bank account to the creditors. I didn't impact the profit and loss at that point. So this is fairly straightforward and simple. But of course, what we can see is that there are two processes involved in this transaction. We enter the bill and then we match the bill. And there may be some times that is important. So for example, if we would need to be able to monitor if we've got a credit with the supplier, if we haven't paid straight away, and we want to make sure that the bill's allocated in the right financial month for the accounts, or for the VAT return if you're VAT registered, then of course it is important to do that process of enter the bill in your QuickBooks software and then mark the bill paid from the bank at the point that you do so, and that will help you to manage who you owe money to. But on the other hand, sometimes you will just pay money to a merchant straight away. There's no purchase invoice, there's no terms. You go and you pay for the item. Perhaps you use your debit card. You pay for the item, and that's it. So of course, in that scenario, there's no need then to manage the creditors. There's nothing to manage there because there's no money outstanding. You've paid it straight away. And so in this instance, what we might decide is to sort of take out that loop of using the creditors and just categorize directly from the bank account. So if I head back into the bank transactions that are waiting, so you can see here parking, for example, £41. So this transaction we paid straight away, and so we don't need to enter a bill and then enter the payment. What we can do is we can pay this directly from the bank account by categorizing it. And in your QuickBooks software, this transaction is what is known as an expense. So that is the process. So if you didn't have a live bank feed, you would enter a new transaction of the expense by going to the supplier expenses. Here, you would enter that transaction and then you would match that in the bank. But because we do have the bank fee to help us to keep our bank reconciled and to help make our bookkeeping quicker, we can just literally categorize it directly from here. So we're going to pop that as a travel expense, and if you're VAT registered, you would select the relevant VAT code, and then you would add that transaction. So by adding that transaction or by entering the expense ready to reconcile the bank if you're accounting manually in your software, what we're doing here is at this point, at the point that we process, we are directly impacting the profit and loss. And of course, there is a balance sheet implication still because the bank account balance is reducing, and so that is our offset. There's no creditors, so there's nothing else to happen. So you can see that if you don't need to manage the supplier, using the expense function in the QuickBooks is saves a little bit of time. It can be quicker, but also you don't get to manage, so you wouldn't want to use this for everything. Different businesses will be different. Some people may have no credit terms with any of their suppliers. Everything potentially may be paid straight away at the point of purchase, and so therefore you may find that most of your items are being using the expenses feature, but you may find that only a few bills need to be entered. On the other hand, you may find all bills need to be entered. And it doesn't matter, because as you can see, as long as you are categorizing the transaction correctly, either by using at the point that you enter the bill or the point that you enter the expense, that is going to put the item in your profit and loss. And as long as that transaction, if you're entering it manually as an expense, matches to the bank, as long as you match up, if you're entering a bill and then matching the payment to that bill, then that will keep your creditors nice and tidy as well. So actually, some people say, I hardly ever pay anything on terms. I just want to use only one or the other. So I'm going to use expense function for me. And some people might say, actually, I find it easier to, I have predominantly creditors and I want to always use the bill function because I'll find that easy. So you could enter a bill for the parking receipt that you'll have, the bit of paper that you'll have. It's absolutely no problem. Because as you can see, both actually ultimately have the same result in the end. The only difference is that step of going through the creditors in effect. So have a think about what you're trying to achieve. Some of the license levels in your QuickBooks don't allow you to do to enter bills in any case, which means that you are always going to be using the expenses function. If you do cash accounting for the actual accounting, I'm not talking about VAT here, then of course you can just categorize everything directly from the bank using the expenses function. So hopefully that helps you to understand, makes it a little bit clearer of what the terms bill and expenses means in your QuickBooks software. So it doesn't mean there's not any problem with any other other way that you know that those terms and what they relate to, but it's important that with lots of things that you understand in the context of what you're doing. So for using the bill is a way of entering your purchase invoice and helping you to maintain your creditors. And then you would match the payment when you make it to that bill using the expenses, effectively categorizes directly. Of course, as always, if you have difficulty getting your head around this and you don't, none of this makes sense, then it could be that you need to have engage somebody to help you with your bookkeeping. But as we always say, if you are going to engage somebody to help you, please do make sure that they're qualified for what they're helping you with. If you look on the QuickBooks website, then you can find whether somebody is certified in QuickBooks, and you should also check that they are qualified in bookkeeping as well, because it's all well and good being able to use the software, but you need to understand the principles. And if you're asking someone to help you because you don't understand the principles, then you need to make sure that you do have somebody that does understand the principles. Make sure that they have indemnity insurance and are a member of a professional body, if applicable. So hopefully this has been helpful. If you haven't already, please do remember to subscribe to the channel. If you found the information helpful, please do like the video, and thank you very much for watching. Goodbye.